In this video, we're going to talk about Aterian, trading under the symbol ATER. We're going to cover the price action over the past few trading days, the company itself, and my recommendations regarding buying, holding, or selling the shares. If you'd like to see more stock analysis videos, please like, comment, and subscribe to my channel. Before the video begins, I'd like to clarify a few things about the timing of when my videos are uploaded and their timeliness about the latest market updates. So most of my videos are recorded and scheduled for the next day. If there are significant volatile movements during the trading day, obviously they will not appear in the video of that day. With that being said, to the extent that it's possible, my analysis will be based on the medium term and the intraday movements. The reason why it shouldn't matter that much though is because most of us, when we trade stocks, we keep the positions for at least a couple of weeks. With that being said, if there are significant stock price movements that happen afterwards, either they will not affect the overall picture, or they are significant enough that it'll be mentioned in the next video about the stock, with reevaluations of the circumstances as needed. Aterian is a company selling different appliances like kitchenware, beauty products, and consumer electronics. It was founded in 2014 and headquartered in the New York City. Many would compare Aterian's business model with the one of Amazon, meaning that it relies on the internet and the artificial intelligence to find an edge over its competitors. The company is currently valued at $337 million in market cap, and its enterprise value is around $451 million. This means that the market is currently buying Aterian at a discount, and it partially has something to do with the short sellers speculating on the company's stock going lower in the market. The enterprise value is a number that represents how much the company is worth once the debts are paid off. Over the past 10 days, the average volume has been around 13 million shares a day, and the daily trading volume fluctuated between 10 and 30 million shares per day over the past week. It's definitely one of the most traded stocks in the market at the moment, apart from the penny stocks, of course. Aterian's beta is 2.0 at the moment, meaning that its volatility is 100% more volatile than the market in general. This is also one of the reasons why Aterian is an interesting stock to trade. Its volatility means that there are more opportunities to get gains from the stock compared to other securities in the market. On the other hand, it's also more likely to get bigger losses with it if you're not careful. Its 52-week high is $48.99, and its 52-week low is $3.04. Right now, the stock price is hanging around $7.52, which has gone below the $8 level that has been holding from October 11th to October 18th. There are two appeals to trade Aterian shares. The first one is if you believe in the company's fundamentals. There is a good narrative regarding the e-commerce and how the artificial intelligence is able to optimize the company's operations. Even if the results may differ from the projections, the market often only needs the projections and the narrative in order to keep going. The second appeal is the short squeeze that is currently going on. The stock is currently in a struggle between those who want to push the stock lower and those who want to squeeze out the short sellers. The short version of it is that as long as there are visible efforts from the short side to keep pushing, it means that they still need Aterian shares to go lower in order to recover for a profit. On the other hand, as long as the long positions remain at an important level and that the short sellers are not able to reach their goal, they will have to pull out eventually and to recover their positions. It would be really important over the next couple of days and weeks to keep an eye out for what's going to happen to the trade volume, and to make sure that you buy the stock while it seems sluggish, not when it begins to pick up the momentum. My recommendation is to hold Aterian shares for up to 1% of your portfolio. The profit taking should depend on your risk appetite and when the stock seems to be reversing from its upward trend. Looking at the current environment, I think that we have to be careful with having exposure in equity market because it has been predicted to eventually go through major pullbacks or recession for a decade. Its future outcome depends on a number of elements. First of all, after the QE years and the drastic increase in their asset prices and the corresponding decrease in the yields, we have to remember that the market is not a mirror of how the economy is really doing. Otherwise, we would be trading in a stock market that is a lot more sideways. 2020 also saw another big push in asset prices, and this time not just the blue chips, but also the pink sheets and the growth stocks. There are, generally speaking, two explanations. The first one is that more money has been printed across the world. And because the real economy has been stagnating over the years, the capital entered the melting pot of globalized finance and has been buying up shares ever since. That was the case for more than a decade, but now that QE has been touching its end in North America and in Europe it's been slowing down, I don't think that newly printed money will necessarily play a part in keeping asset prices high or even higher in the years to come. On the other hand, this decrease of new money is partially compensated with the geopolitical tensions across the world rising. And the more tensions there are, the more money tends to flow to the US and North America because it is still perceived as the ultimate safe haven for capital from different countries and continents, especially the ones that are currently seeing turmoils and social unrests. One last phenomenon is the attempt of the market participants to protect their capital, not by just remaining cash heavy, but by creating artificial bubbles of speculation in order to safekeep their capital. What all these mean for the market is that the degree of uncertainty will increase over the next couple of months and even years, especially as the expectation for a recession has been building up for quite some time. After the party in 2020, and the recent announcements from the US Federal Reserve, as well as the accumulation of economic difficulties coming from Asia, I believe that these elements should bring us to reevaluate our portfolio structure. A healthy portfolio normally contains a healthy percentage of its positions in sectors that are different, diversified, and that are mature, with predictable cash flows, such as REITs, fixed income assets, and preferred shares. The rest should then be invested in growth stocks or to remain cash heavy in the case there is an opportunity to scoop the bottom. I think that overall, the current environment makes me think that there will be opportunities to average down the cost basis or at least give us more room to add more shares to it in the future. Thank you for watching. If you like my content, please like, comment, and subscribe to my channel.